Wow, this is absolutely crazy. Welcome back to another explainer, everyone. Today we are looking at a stock that is giving investors absolute whiplash. I'm talking about Robinhood Markets, ticker symbol HOOD. We are right in the middle of 2026, and the headlines are just exploding. One minute the stock is soaring to the moon, the next it's taking a complete nosedive, and now breaking news just hit that Robinhood is stepping into the massive SpaceX IPO. I'm your host, and with me is our chief investment analyst to help us cut through all this noise and figure out what is actually going on. It is great to be here.
And you're right to point out the whiplash, because if you look at the data right from the June 10, 2026 market close, Robinhood shares actually went completely against the broader market tide. The S&P 500 fell 1.62%, but Robinhood closed at $86.36. That was up 3.09% on a massive trading volume of 41.8 million shares. To put that into perspective, that volume is roughly 41% above its typical three-month average. The volatility is undeniable, but it is entirely driven by measurable, fundamental shifts in their business structure.
Okay, wait a minute, Doctor. Before we get into all the shiny new updates in the SpaceX hype, I have to ask the contrarian question that pretty much every retail investor is screaming at their screen right now. If Robinhood's first quarter revenue grew 15% year over year to $1.07 billion, why is the stock completely plummeted? I mean, they were riding this massive high of $152 back in October 2025, and now they are sitting at around $86. That's a 22% drop this year alone. They are clearly making good money, so why is the market punishing the stock price like this? That is the exact right question to ask, and the underlying numbers explain exactly why the market is punishing them. It comes down to the quality and source of that revenue. First quarter earnings per share rose only 3% to $0.38. While overall revenue grew, cryptocurrency revenue specifically absolutely sank. It dropped 47%, down to $134 million. The huge digital asset trading frenzy we saw in late 2025 has cooled off significantly. So, the market isn't just looking at the top-line total revenue, investors are looking at Robinhood's heavy reliance on customer trading volume. With the stock still trading at a massive premium of about 43 times earnings, any softening in actual trading activity leaves very little cushion for that high valuation.
OMG, so the crypto winter is basically dragging them down again. But you just mentioned a huge 3.09% surge today on heavy volume. What exactly is the trigger there? If crypto is dragging them down, what is suddenly pulling them out of that slump?
The immediate catalyst, which is proven by the June 10th announcements, is that CEO Vlad Tenev confirmed Robinhood received regulatory approval to officially underwrite initial public offerings. This isn't just about offering a few shares to users, it's about actively managing the actual IPO process. And the timing here is the real driver, because this news comes just days before the highly anticipated SpaceX IPO. According to the regulatory filings, Robinhood is opening the SpaceX IPO directly to everyday retail investors, allowing them to request shares at the IPO price. This directly addresses the engagement problem we just discussed by attracting a massive wave of casual investors who might not otherwise have any reason to open or fund a brokerage account right now.
Wait, hold on. Let me stop you right there. What does underwriting and routing IPOs have to do with our stock accounts? I know Robinhood is the free stock app, but how exactly are they monetizing this? That's way too complicated. Could you give a simple analogy, like explain this to an elementary schooler? Certainly. Let's break this down. Think of Robinhood like a massive, free-to-enter amusement park. Because admission at the front gate is totally free, millions of people walk in. Robinhood doesn't charge you to go on the rides, which in this case represents stock trading. Instead, they make money in two entirely different ways. First, they sell the data of which rides people are lining up for to third-party vendors. That is called payment for order flow. Second, while you're walking around the park, you leave your extra pocket money in their lockers. Robinhood takes all that idle locker money, lends it out to other businesses at a high interest rate, and keeps the profit. That is called net interest income. If you look at the Q1 2026 data, that net interest revenue rose 24% to $359 million.
Oh, wow. So to boil that down, they give you free tickets to the amusement park, but they make their billions by taking small cuts from the vendors and lending out the pocket money you aren't currently using. That is a brilliant business model, assuming the park is actually full of people.
Precisely. The model works perfectly when engagement is high. Now, let's transition into a deeper dive of their financial fundamentals to see exactly how that amusement park model is shifting under the surface.
Wow, look at the table right here. The year-over-year changes are incredibly drastic. I see crypto basically dropping off a cliff, but what on earth is happening at the bottom row there? Event contracts? What even is that? Look closely at the staggering difference on this table, because it tells the whole story. As we noted, crypto revenue crashed by 47%.
down to $134 million. To replace that massive loss of revenue, Robinhood leaned heavily into becoming a broader, more diversified financial institution. You see net interest revenues increased 24% year over year to $359 million. That was primarily driven by growth in interest-earning assets and margin lending. But you hit the nail on the head. The most staggering figure is their other transaction revenue. Revenues from event contracts, which are essentially prediction market bets Robinhood now offers on real-world outcomes like elections and sports, skyrocketed to $104 million in Q1 2026. That is up from a mere $3 million just a year earlier. They completely replaced the $118 million hole left by the crypto crash with a $101 million surge in prediction markets.
Are you serious? Prediction markets for elections and sports? Why is the stock market going so wild over a so-called crypto and stock app when it turns out they are basically running a bank and a prediction market on the side? Because, statistically speaking, this aggressive diversification strategy is actually working. If you look at this exact revenue breakdown from Q1 2026, equities, which means actual traditional stock trading, only accounts for 8% of their entire revenue. Crypto is now just 13%. Meanwhile, net interest income is their massive central pillar, pulling in 34% of revenue. Options trading holds 24%, and futures and event contracts have grown to 14%. Furthermore, subscription fees from Robinhood Gold brought in $50 million, up 32% year over year, as their subscriber base grew to 4.3 million. The data proves that while retail stock trading might fluctuate wildly, Robinhood is successfully monetizing its users across a highly diversified suite of entirely different financial products.
So basically, even if users aren't frantically trading Bitcoin like they were back in 2025, they are still paying for Gold monthly subscriptions, they're placing bets on sports, and they're leaving their cash in their accounts for Robinhood to lend out. But honestly, is the actual user base still growing, or are they just squeezing more money out of the same people left over from the pandemic hype? The user base is absolutely still growing, and it is proven by the raw numbers in their May 2026 official operating data release. Funded customers reached 27.7 million, representing a 7% year-over-year growth. Even more critically, total platform assets reached $377 billion in May. That is up an astounding 48% year-over-year. To put that massive number into perspective, in Q1, their margin book alone increased 93% year-over-year to a record $17.7 billion. The platform is not just retaining its users, it is actively accumulating their total wealth at an accelerating rate. So essentially, Robinhood isn't just a trendy app anymore. They are successfully diversifying their income streams and literally physically holding on to hundreds of billions of dollars of retail wealth. That is insane. It is a massive shift. And that brings us to the broader industry environment. Let's examine their economic moat and look at what their actual irreplaceable weapon is in this highly competitive market.
27 million. I mean, that is literally the population of a small country. Exactly. 27.4 million was their official funded customer count at the end of Q1 2026. The average age of a Robinhood customer right now is 35. This specific demographic is notoriously difficult for legacy brokers to acquire. So Robinhood's true economic moat is essentially this massive, self-sustaining engagement engine. They offer features like Robinhood Strategies, custodial accounts for children, and the new Robinhood Chain to keep these users completely locked into their ecosystem. Every single new feature they launch, whether it's event contracts, new credit cards, or getting access to the SpaceX IPO, gives these 27.4 million people another active reason to fund their accounts and stay within the Robinhood walls.
Okay, but I gotta play devil's advocate again here. Do these 27 million millennials actually have any real money? We always hear about them just buying fractional shares of meme stocks with $20. Is this a wealthy demographic? They absolutely do have real money, and the data completely dismantles that outdated narrative. Total platform assets reached $307 billion by the end of March, which was up 39% year over year. Net deposits over the previous 12 months were $67.8 billion. Furthermore, Robinhood retirement assets under custody increased 90% year over year to a record $27.4 billion. So they aren't just playing with pocket change anymore. They are actively transferring their entire 401ks, they are opening IRAs, and they are heavily utilizing high-yield cash programs. The sheer gravity of holding $307 billion in assets creates a formidable barrier to entry for literally any new fintech startup trying to unseat them.
Wait, let me push back on this. You are painting a very rosy picture of all these billions, but haven't they had massive, catastrophic failures? I vividly remember people being totally locked out of their accounts when the market was crashing. What are the fatal weaknesses here? You are entirely correct to point out the historical risks, and the data reflects significant regulatory and operational vulnerabilities in their past. In March 2020, Robinhood suffered prolonged system outages during historic market sell-offs. In January 2021, during the massive GameStop short squeeze, clearinghouse requirements literally forced Robinhood to halt purchasing of certain volatile stocks. That enraged their user base and required an emergency $3 billion capital raise. This operational deficiency resulted in a record $70 million FINRA penalty in June 2021. Today, in 2026, their biggest weakness is their valuation. Trading at a 43x price-to-earnings multiple is a massive premium. If trading activity remains soft, or if regulatory shifts suddenly target their payment for order flow model, that extremely high multiple leaves absolutely zero margin for error.
Okay, so to boil that all down, they have a proven history of breaking down when the pressure gets too high, and their stock is priced for absolute perfection today. We really need to look at where this is actually heading. Agreed. Let's look forward. We can lay out 3 specific future survival scenarios for Robinhood based on these macroeconomic triggers.
Okay, let's start with the extremes. What happens if they hit an absolute home run versus what happens if the wheels just completely fall off? The bull case relies heavily on engagement catalysts like the SpaceX IPO underwriting. If allowing retail investors to request SpaceX shares at the IPO price successfully triggers a massive wave of new funded accounts and net deposits, similar to the $18 billion in net deposits they saw in Q1, then Robinhood can actually justify that steep 43x PE premium. Their average revenue per user, which already increased 8% to $157, would continue to climb as new money enters the ecosystem. Now, on the flip side, the bear case materializes if the risks we discussed come to fruition. If the 47% slump in cryptocurrency trading infects the broader equities market, and if the novelty of their $104 million event contracts business just wears off, overall trading activity will soften. Because their profits still heavily ride on transaction volumes, a sustained drop in user engagement will cause that 43x valuation multiple to violently compress, crashing the stock price regardless of how strong their net interest income is.
That is really fascinating. But neither of those wild extremes usually happens perfectly. What is the most realistic, neutral outcome based on the cold, hard facts today? The base case, which is the most statistically likely future based on current momentum, is a slow and steady maturation. The numbers show their diversification is already working. In this scenario, Robinhood continues its transition away from relying on volatile crypto spikes. Net interest revenue will remain their bedrock, hovering right around that 34% mark as they continue to grow their $19.5 billion margin book and attract high-yield cash deposits. Instead of explosive meme stock growth, we will see Robinhood Gold subscriptions, which grew 36% last year, and features like event contracts drive slow, steady customer retention. They will effectively evolve from a volatile, hype-driven trading app into a diversified, mainstream financial institution.
So, to sum it all up, Robinhood is finally growing up, and the stock will eventually reflect their actual bank accounts, not just the Twitter hype. That brings to mind the legendary quote from Benjamin Graham. In the short run, the market is a voting machine, but in the long run, it is a weighing machine. Robinhood has survived the crazy voting machine of the meme stock era, and now, with $377 billion in platform assets, the market is finally starting to weigh their true fundamental value. Thank you for watching today's Explainer. Your subscriptions, likes, and supportive comments are a huge encouragement for our production. Let us know in the comments if you are going to be buying the SpaceX IPO on Robinhood, and we will see you next time.